The Dhandho Investor by Mohnish Pabrai is a standout book in the investment field where the author shares smart investment strategies based on time-tested principles. Mohnish Pabrai, a renowned investor and founder of Pabrai Investment Funds, has learned and applied the investment philosophy of Warren Buffett and Charlie Munger. This book provides valuable lessons on how to invest using the Dhandho method, a simple yet powerful approach that helps investors maximize profits and minimize risks. Here are the key lessons in this book. 1. Invest in businesses with high potential but low risk. One of the main principles of the Dhandho method is to invest in companies with high potential but low risk. Dhandho's approach, Pabrai describes investing in businesses with sustainable competitive advantages, low volatility, but high future growth potential. Look for low risk, high reward environments. The goal is to find investment opportunities with low risk but high potential for profit, similar to buying in panic and selling in greed. 2. Dhandho is a long-term investment strategy. Pabrai believes that long-term investing is the key to achieving sustainable success. Patience is needed, similar to Warren Buffett's investment philosophy. Dhandho emphasizes the importance of holding stocks for a long time to take advantage of the company's growth. Focus on value instead of short-term volatility. Investors should not be swayed by short-term changes in stock prices, but should always focus on the long-term value of the company. 3. Rely on proven principles. Pabrai emphasizes learning from great investors like Warren Buffett and Charlie Munger to apply proven strategies. Learn from successful investors. Pabrai shares that he learned a lot from Buffett and Munger, who always look for companies with simple, easy-to-understand business models and the ability to generate sustainable profits. Invest in easy-to-understand companies. Dhandho advises investors to only invest in companies whose business models, financials, and future prospects they understand. 4. Investment rule: never lose money. One of the important investment rules in the Dhandho method is never lose money. Protect your investment capital. Pabrai recommends that investors focus on minimizing risk rather than maximizing short-term profits. Warren Buffett's rule: this is an important principle that Pabrai learned from Buffett, which is to never lose money in investing. This means that investors need to be very cautious and always look for safe and sustainable investments. 5. Buy and hold strategy. Pabrai recommends using the buy and hold strategy in investing. Instead of making short-term transactions or investing in unstable companies, look for companies with long-term value. Investors need to choose companies with stable growth potential for many years, instead of chasing hot stocks with strong fluctuations in the short term. Reinvest profits. This strategy also encourages reinvesting profits from investments, helping to create sustainable profitability over time. 6. Look for companies with simple business models. Dhandho also advises investors to look for companies with simple and easy-to-understand business models. Don't invest in complex companies. Companies with complex and difficult-to-understand business models will bring great risk. Instead, Pabrai advises investors to focus on companies that are easy to understand, where you can clearly predict the future. Sustainable and stable. Companies with simple models tend to be more stable and sustainable over the long term, helping to minimize risks for investors. 7. Use leverage tools to optimize profits. Pabrai shares about using financial tools such as a leverage, debt, intelligently to optimize profits without increasing too much risk. Smart leverage. Dhandho encourages the use of leverage in situations with a high probability of success, but must be well controlled to avoid financial risk. Look for advantages in adverse situations. Investors need to take advantage of situations where stocks are undervalued or overlooked, thereby optimizing profits in the long term. 8. The Dhandho approach. Pabrai believes that the Dhandho method is a systematic and scientific approach to investing, minimizing risks and maximizing profits. Focus on stable and long-term profits. Do not get caught up in short-term trading or investing in volatile stocks. Focus on stable businesses. The Dhandho approach encourages choosing companies with strong economic fundamentals and the ability to maintain sustainable profits. Conclusion: the Dhandho method for smart and sustainable investing. The Dhandho Investor is a book that provides smart and practical investment strategies. The Dhandho method helps investors focus on minimizing risk and maximizing long-term returns by investing in companies with stable and understandable potential. Investing according to the Dhandho philosophy helps build sustainable wealth and is not affected by short-term market fluctuations.